ለመማር ወደ ትምህርት ተቋም መሄድ ግድ አይደለም።
ናሽናል አቪዬሽን ኮሌጅ
ራሳችሁን ከኮሮና ቫይረስ ወረርሽኝ እየጠበቃችሁ በቤታችሁ ወይም በተመቻችሁ ቦታ
በኢንተርኔት አማካኝነት በኦንላይን ትምህርታችሁን መከታተል ይቻላል።
ካናዳ ከሚገኘው ኢንተርናሽናል ኤር ትራንስፖርት አሶሲዬሽን አያታና
ከእንግሊዙ ኢንስቲትዩት ኦፍ ኮመርሻል ማኔጅመንት ICM ጋር በመተባበር የሚሰጡ ትምህርቶችን ተከታትላችሁ በ6 ወር ጊዜ በዓለም አቀፍ ደረጃ ተቀባይነት ያለውን የስልጠና ማስረጃ ባለቤት መሆን ይቻላል።
ከኢትዮጵያ ሲቪል አቪዬሽን ባለስልጣን ሙሉ ዕውቅና ባገኘንባቸው የፍላይት ኦፕሬሽን እና የሆስተስ ስልጠናም በምዝገባ ላይ ነን።
ጥያቄና መልስ፣ የክፍል ስራዎች ብሎም ፈተና መፈተን ክፍል ውስጥ እንዳላችሁ አይነት
ልምድ ባላቸው መምህራን እየተማራችሁ
በኦንላይን ባላችሁበት ቦታ
አድራሻ ከ22 ማዞሪያ ወደ ሾላ ገበያ በሚወስደው መንገድ 150 ሜትር ገባ ብሎ ናሽናል አቪዬሽን ኮሌጅ
የናሽናል ኤርዌይስ እህት ኩባንያ
ህልሞን እውን ያደርጋል።
I just want us to introduce the course and see and chart the way forward. Now moving onwards from today, just about the course. And as I said, the course is MBA 711. It's financial ratio analysis and portfolio management. To me, the prerequisite for this course is actually corporate finance, which we did. And then I don't know whether you have some basics in accounting.
Basic accounting?
Yes, some accounting. Have you done some accounting?
Yes, we have done it.
Okay, that's good. So you know the financial statements that we normally prepare.
An income statement.
The income statement, balance sheet, and
owner's equity.
Huh?
Owner's equity.
Owner's equity, yes.
Owner equity, yeah.
Yes.
Cash flow.
Cash flow statement, good. And cash flow statement. So those are the key important statements that we use to do a ratio analysis, a financial analysis.
Yes.
So we use statements, financial statements, to prepare or to do ratio analysis. So our discussion in this course is going to entail the processes that we undergo if we want to evaluate the performance of a given business entity. It can be a company, it can be a partnership, it can be a sole proprietorship. So what are we required to do to measure the performance of an entity? And then, as we measure the performance of an entity, we have to make use of the financial statements, because if, according to the introduction of accounting, we say financial statements are prepared for purposes of communicating to the interested parties the performance of the organization as at a given date. That's why we have a balance sheet that has to be prepared as at a given date. We have an income statement for the period ended at this time. And then we use such information to analyze the performance of a given organization. Now, we want to relate that to now the portfolio management. There are theories of financial management. And one of the key theories of financial management is the portfolio theory. And portfolio theory is one of the origins, one of the original theories that laid the foundation of finance discipline that you are doing now. Portfolio theory by Markowitz. So what does this theory tell us? Okay, and what are we supposed to do with our investments? You realize when we are looking at corporate finance, there are areas that we went into, for example, I hinted about portfolio management and how we do analysis of projects and then select the most appropriate projects for investment. So here now we are going to do much more concerning the portfolio formation and management. It's about formation and management. And what is a portfolio? As our last introduction was, a portfolio is a group of investments, isn't it? Having an investments of more than one. So it's not just accumulating investments, but evaluating how best these investments can combine to maximize your returns and minimize the risks, isn't it? So it's a trade-off between returns and the risks. And as we are looking at this, we were evaluating, first of all, we started with a single project. We were determining the risk of a project. And then we are also determining the returns of a project. So there is the expected return and the actual return. So when there is a deviation between expected return and actual return, then we can always determine the risk, because risk is the deviation, the standard deviation, all right, between the expected and the actual. So with this combination, we are able to select projects which have low risks and projects which have higher returns, so that we maximize on our returns and maximize our shareholders' wealth. So it's kind of a revision of what we already discussed in our corporate finance class, but here we'll be trying to link with the financial analysis now that the topic talks about financial analysis and portfolio management.
Okay.
So without much ado, I'm just going to project the course outline so that we be aware of what you're going to discuss under this course. And then after that, we shall discuss on the way forward, because as you will see, the course demands for coursework coverage, which will entail many ways. For example, we'll need to research on a topic, do a presentation. You'll need to probably do a quiz. You need to do this and that, and we'll have to agree on that as a class as we move forward in terms of covering whatever we are required to cover within this course.
Okay.
Okay. Now, just allow me to share the presentation, and then we'll talk about the others as we continue. I was supposed to.
Is there a problem?
No. I'm just working on it.
Okay.
Can you read? Can you read what is?
MBA. Okay. Financial statement analysis and portfolio management course type. Okay.
Okay. So. Okay, good. So now this is now the course, financial statement analysis and portfolio management. Today I want us to look at the course outline basically, and after this we are going to agree on the way forward. in terms of coursework coverage. And we are supposed to be meeting today and tomorrow, Girma?
Yes, yes.
Tomorrow,
Tomorrow
what
afternoon?
time?
Afternoon.
From what time?
At, I think, at 2
At 2.
or, yeah,
Okay,
I
so
think.
yes, so looking at this, so you already know my name. I'm not a new face to you. We've interacted a lot physically when I was in Addis, and now this time I'm bound to meet you online. But I think all the same, we try to do the best we can to make us meet the objective. So my number is that, and my email address is that. Okay, you already have it. So the course purpose, the purpose of this course is to enable you as students to acquire knowledge on the analysis and interpretation of financial statements for decision making and acquire knowledge on investment portfolio management. Now, the topic, looking at the topic, it's a two-area topic. You need to understand financial statement analysis, partly, all right? Because for you to understand this one best, then you needed to have some accounting background, how we prepare financial statements, and then now the reports that we give, the income statement, the balance sheet, and the cash flow statement. And then now we want to see how we can best use this information that is provided to us to prepare us in making decisions to do with the portfolio management. When you talk about portfolio management, it's just about making decisions about which portfolio we invest in, all right? So the work of managers is simple, just to plan, all right, control, basically. So we need to plan. How do we plan for a portfolio? We need to evaluate these portfolios, select which ones are the best for us to invest in, and then which is the appropriate time. Then this goes with planning, all right? And then how to invest is now another aspect of which this area is going to address us into. So apart from the knowledge about analysis and interpretation of financial statements, we have also to enrich ourselves with the knowledge of investment avenues. There are so many investment avenues one can think of, all right? What are some of the investment avenues? All right, you can buy shares. Those are investment avenues. You can go into construction industry. That's an investment avenue. You can go into transport industry. That is an investment avenue. You can go into a retail trade. That's like an investment avenue. But you see, you need to have this knowledge, isn't it? Many people do not have this knowledge because they have not been in my class. But now the fact that you are in my class, you will gain this knowledge so that you understand some of these investment avenues that you can imagine. And then now it's not that just any avenue that you can join. It's about evaluating the available avenues and selecting the one that is best at that particular time for investment. Then identification of determinants of a good investment. All right. What are these factors that you need to consider to select a good investment? You know, in the market, all manner of investments are there that you can imagine. The legal and the illegal ones, isn't it? They are all there, isn't it? So,
Yes.
so can you identify those investments that are good and good in financial, in terms of returns? All right. Here we are concerned about returns. Now the legal aspect is secondary, isn't it? Because
Yes.
the course we are dealing with is finance. All right. We are training to be finance people and people who are to make decisions to do with the investments. So now it is about you selecting a project that is viable in financial terms. Yes. So the legality of the investment, again, it's an issue of again discipline, the legal systems that are in place, but we all want to do things that are correct in terms of the legal terms, in terms of the market discipline. We want to practice something that is acceptable generally. All right. Then analysis of different investment avenues for purpose of making investment decisions. So we analyze these different avenues and different types of investments so that we come up with a more viable investment that we can invest in. All right. And with this investment selection, we come up with a portfolio. And a portfolio, as we know, is a combination of good investments that will maximize the returns of the investor and minimize the risk of the investor. And I normally use an example of an investor who invests in a company that produces umbrellas, and another one investing in
Jackets.
umbrellas together with the jackets. Yes, you have read
Yes.
that, and probably I used that in that example. So the same principle applies here. So if you want to diversify your risk, then you have to evaluate your projects very well, know the industry, know the market, isn't it? Know the distribution channels for you to be able to assess and select the right project to invest in. So these are some of the things that we are going to discuss here, and you can see they are more practical than we ever think of when you just talk about it, in the open. Then the course objectives. Upon successful completion of this course, you should be able to describe the steps in the financial statement analysis framework. All right. How do we analyze statements? All right. There's a process we undergo when you're analyzing process, because it starts with the computation. All right. Giving identification of the formula, the right formula, then computation of the ratio, and then the interpretation of that particular ratio, and then making a decision depending on the results of the interpretation of the ratio. So this are a key project, a process that we have to undertake whenever we are evaluating projects. I mean, performance of the organization based on ratio analysis. Okay, then evaluate the various alternative sources of financial information. There are so many sources of financial information. It can be through statements, it can be through media, it can be through so many ways. Research, isn't it? People take studies about organizations, and then they give their findings. So that can be source of information about a particular sector or organization performance, and that can be viable for forming a basis for decision making. Apply the various financial statement analytical tools and techniques in analyzing financial statements. So these are some of the things that will endeavor doing for us to ensure that we actually do what is required of this area of financial statement analysis. As I'm trying to summarize everything into simple, understandable subheadings. And as I said, the topic is actually can be divided into two: financial statement analysis, and then now the portfolio analysis. And then now trying to link about the two, isn't it? So the second area is now to explain the concept of portfolio management. The first area is about the interpretation of the financial statements. But now the second area is now going to take us through the portfolio management. So it will provide knowledge on the different avenues of investment. Of course, as I mentioned, you need to identify the different avenues of investment. To understand skills of investment analysis at different levels of the economy. So you must scan the economy and understand the economy you are operating in. What kind of economy am I operating in? And the economy defines the market that you are likely to get. The economy defines the loans, the kind of capital you are likely to raise from the market. If it is loans or if it is issuing of shares, the kind of markets that are there. So, and they will inform you a lot about the source and where to apply your funds for investment purposes. Then to describe the operations of the capital and money markets to the economy. All right, now this is just furthering on what I've just explained above there. We need to understand the market, because if you want loans or if you want to raise capital, then you must approach the market. If you want to do your sales, then you must approach the market. If you want to get suppliers, then you must approach the market. So we are saying, as a business, we cannot operate in isolation. We have to have a linkage. We have to create a network, because these are the people we have to work with for us to realize our goals or our objectives. Every business has its objectives. In fact, as you go into portfolio formation or portfolio investment, you have an objective behind it. So for you to realize that, then you must work with the other market players. You cannot work in isolation. So one of the other market players are these providers of funds, who may be the banks, who may be the shareholders, who may be the investors, isn't it? And many others. And even the people who may be interested in your goods, the goods that you intend to produce or to offer in the market. Okay? Then we'll also look at to identify portfolio analysis models to reduce risk and maximize returns. Portfolio identification is basically about risk-return trade-off. When I talk about risk-return trade-off, it's about trying to identify projects that have minimal risk, all right, but high returns. So it is it's nature, it's natural for an investor. And in finance, we always assume all investors are risk averse. We want to minimize risk as much as possible. So whichever projects or whichever investment you are undertaking, we always think of minimizing the risk and maximizing our returns. So in a nutshell, what I'm saying is we are going to see or to look into how well we can evaluate projects in terms of risk and return, so that we identify the right project for us to invest in. Now, it always starts with a single project, and then now it goes now beyond a single project into a portfolio. So when you talk about a portfolio, it's now about a combination. So we look at it from a combination point of view. That's why we can determine the risk of a portfolio, and we can also determine the return of a portfolio, other than the return of a single project and the risk of a single project. So when you talk about a portfolio, it's about how best different projects can combine to maximize returns and minimize risks. Then to connect the need for financial statement analysis and portfolio management. So where is the link? Why portfolio, financial statement analysis and portfolio management? Where is the link? All right. So these are some of the things that we are going to look at, because if you have to do an investment, okay, and like I've said, you don't invest into yourself, you invest into the market. Okay, so when you talk about investment into the market, then you have to understand the market that you're investing into. So in the market, there are different players, all right? There are companies. If you're interested in buying shares, then it's important that you get the statements of that organization you are intending to buy shares from. Then those statements, you have to understand how to analyze them so that they give you the information about the organization you want to invest into. All right. Then now with that, you can be able to make an informed decision whether to go ahead and invest in that organization or not. So you can see the link. It is the market. All right. You're opening yourself to the market, and for you to play in the market, then you must understand the market for you to become a good player in that market. A good player in the sense that a player who will maximize the returns, all right, and minimize the risk in terms of portfolio formation and portfolio investment. So this is the bottom line, and it's as simple as that. I was just guided by the provided course outline, so that I came up with this Marshall kind of analysis of the whole program, the whole course outline, so that we are able to tackle these issues step by step and be able to follow what is expected of us. Then the learning outcome at the end of the course, you should be able to demonstrate an understanding of the different avenue of investment available to an investor. Okay? Are you able to analyze and identify, all right, the different avenues of an investor? Okay? Because we are training people who are finance managers, and that would be your work in the end of the day. Then secondly, evaluate investment analysis at different levels of the economy. Are you able to evaluate investment analysis at different levels of the economy in terms of the portfolios analysis? As I said, portfolio means scanning the market, understanding the market, and then you must understand the industries, the available industries in the market, so that you choose the right sector to invest in. All right. After doing the analysis, all right, assess the impact of operations of the capital and the money markets to the economy. All right. We should appreciate these markets. These are money markets. All right. Money markets, we have capital market and we have the money market. So capital market is where if you want to raise capital, you can issue shares right? Like stock exchanges, right? Money market is like banks. You can go and borrow loans, okay? So we have, even in the capital market, we have primary and secondary. So these are things that we need to be familiar with, because they help us make informed decisions when we are trying to formulate a portfolio. Then analyze portfolios in order to reduce risk and maximize returns. So are you able to analyze a portfolio? Are you able to minimize risk? All right. But again, for you to do this, you must be able to understand how to determine the returns of a portfolio, because you can't maximize what you don't know how to arrive at, isn't it? And then as well as the risk, how do you minimize risk? So these are things that we will be discussing under this course. Now, the course content, as I said, it's broken into two, and basically this is what I thought would be the most appropriate for us. Introduction to financial statement analysis and its role. Now, we need to appreciate it because it's very important. It gives us more about the organization's performance. It can tell us the direction of the organization and where the organization is coming from. It can tell us the key stakeholders of the organization and many other information about the organization. So we shall look at the financial statements of a business entity, and just in a light touch, we have mentioned them. They are basically 3 or 4. Then the objectives of analyzing financial statements. Why should you analyze financial statements? Analysis and interpretation of financial statements. So how do we analyze and interpret the financial statements? We use ratios, basically, and that has been proved to be the most important tool that is used by managers to analyze the performance of an organization in terms of the financial statements. So the standards of comparisons, for example, we compare our determined ratios with the industry provisions, okay? Like if the industry, like if, for example, the liquidity ratio should be 1 to 2, all right? So meaning the current assets should be twice the current liabilities. Should cover the current liabilities at least twice. So as you do your analysis, you can also gauge the performance of the organization in relation to the industry standards, really, so that you are able to make informed decisions. Then techniques of analysis. What are some of these techniques of analysis? There are so many techniques of analysis, but the most important one is the ratios, all right, which we are going to use in our course. Then advantages and disadvantages of financial statement analysis using ratios. Every tool that we use as managers has its limitations and strength. So it's important that we understand some of these limitations and strength of a tool, so that as much as it gives us this, there is always now some gap that it's giving us, which is unfilled, and which other tools can be used to maximize on that. So it's very important that we also look at the advantages and disadvantages. Now, given that there's various techniques that can be used, but because we are choosing ratios, then it has its strength and its limitations. Okay, now portfolio analysis and investment management decisions. Now, this is the second area we are going to look into, and it will be a little bit wider. So we shall look at the introduction to portfolio management and analysis. All right. What is expected of us when you talk about portfolio analysis and investment management? Then link between financial statement analysis and investment portfolio analysis. Where's the link? We need to appreciate the two approaches. Because at the end of the day, the two approaches help us make decisions as finance managers. But now, where is the link? All right? Because that's the subject of the day. Where is the link? So it's important that we understand the link between the two tools that we use for decision making. So types of investments, there are various types of investments. As I mentioned, we have security markets. Now we have the secondary, primary, and all these markets. Regulation of stock markets. Governments nowadays try to regulate the markets as opposed to before when they were open. But governments have come in to regulate them so that they safeguard the interest of the common citizens who are being manipulated by brokers and all this kind of stuff. So you'll find there is a governmental authority which is in charge. Like in Kenya, we have the Capital Markets Authority. That is an authority charged with the management of the capital markets. So it is an agent of the government. It is there on behalf of the government to regulate these stock markets, so that it takes care of the interests of the citizens, so that not so many citizens or Kenyans are informed about these markets or how they operate, or how to purchase dividends, shares, and all this. So they try to regulate so that they minimize the chances of manipulation of the majority who are not informed. Okay, so this is about regulation of stock markets, and even banks. Banks are also regulated by the central bank, so that they also try to minimize the operations of these banks, because banks are basically there to offer loans. So there are the issues of exorbitant interest rates, the issues of the security that whoever is seeking for a loan provides, and all this kind of stuff. So the regulation has to be there. So that's why some of these authorities are put in place to ensure that the common citizen actually is not disadvantaged in the whole process. Then we have the security analysis. How do we analyze security? So we shall start by looking at the individual security and then go into portfolio security. Valuation of securities. How do we value securities? I don't know whether we looked at this in corporate finance. We value securities. If we can determine the cost of a security, then we can also determine the value of a security. Because in determination of a cost of a security, we use the market price, isn't it? So
Yes.
if we can determine the cost, then the cost, we just convert that into, we make the market price become the subject, so that we can determine the market price using those other variables. So we shall look at that. And then the market efficient hypothesis. This is a very simple hypothesis. We have several hypotheses that have been put forward to explain the market. And it's good that we understand them, because this is now understanding the market very well. Because you have to understand the market you're operating in for you to be able to make some of these decisions that we're talking about. So market hypothesis, this is another area that is quite open, and we have weak form, we have strong, we have, and many others, weak form, strong form, and all that. And it's about information availability in the market. All right, information availability in the market. So we shall discuss that when you come there. Portfolio theories. Now, portfolio theory is the basic one, the Markowitz portfolio theory, and it lays the foundation of the portfolio analysis that you're going to look into. Then portfolio management. How do you manage a portfolio? By analyzing the risk and returns. So we'll come to that. And some of these things I had hinted about them when we are looking at corporate finance, because this is where it's mostly practiced in a corporate entity, all right? So it's good that we did corporate finance, so that when I will be talking about some of these things, you already have an idea of what I'm talking about, because our general focus is going to be on corporate organizations that have issued shares, and they're operating in a market as an entity on their own, not as a partnership or as a sole proprietorship. Then we shall look at the asset pricing models. We have the CAPM models, we have the APT models. So there are so many models which we are going to look at. And it's just about basically risk return and market analysis, the market security and all this, market risk, market returns in comparison with the riskless assets. So these models play around that, because there are those investments which are risk-free. For example, when you buy treasury bills that are issued by the government, those ones are considered to be risk-free, all right, as opposed to when you buy bonds of an organization, in case the organization falls or does not all right, survive in the kind of investment, you find it will be affected in a way or the other. So we shall also look at that, a combination of having the riskless assets and the risky assets. Then we shall also look at the derivatives. These are contracts probably that we use in the market to safeguard ourselves against the risk. And this is more international trading than ever. If you've done international finance, you'll realize derivatives play handy, because they are the documents that we use to safeguard ourselves against risk. But it's equally important that we read about them to understand, because for you to diversify your portfolio, then sometimes it may call for trading outside, and then you need to understand this aspect of risk management that is required by every investor. Then references, we have the core text, they are here. I think I'll share the course outline generally, so that you look at these textbooks and see whether you can get them or you can get access to them. All right. But what I'm saying is the important thing is getting the course outline. And then now you go into looking for any book that will you can easily understand that has this content, but also guided by our discussions in class. But generally, these are the recommended books, right? We have the core text, and then we have other resources. They're here. Okay. They're here. You realize that all these resource materials they're talking about security analysis and portfolio management, yes, theory and practice. We have investment analysis and portfolio management. We have financial management. All right. So we are basically looking at financial management, finance and accounting for managers, fundamentals of financial management. So we have business finance theory and practice, investment management, security analysis and portfolio management. So these are actually some of the books that will be you can seek for reference material. Now, lastly, last but not least, we'll look at assessment and evaluation modality. Now, the assessment scheme of the course will include both continuous assessment and final examination modalities. So you'll have to do a final examination at the end of the day. But apart from that, there is this continuous assessment. The continuous assessment may include, but it's not limited to, project work or presentations, journals review and presentations, and chapter endings, quizzes. Now, according to my own evaluation, this course will not call for journal review, but it will call for probably indirectly, it will call for presentations. There are topics which I'll require that I allocate students to go research on and then come and present in class. And then after presentation, I'll be able to give my own contribution so that I share out what is actually expected of that topic in terms of difference. I hope you understand me and you agree with me on that line. So yes. in one way or the other, what I'm saying is we shall have to share topics as each one of us will have to take some topic and then we'll go research on it and then we'll come and present in class, all right, to everybody. And then now we shall now I'll give my verdict or my contribution towards the presentation. And of course, as I do that, I'll be highlighting the key areas that are important for that particular topic. That's one way of covering our coursework, all right? The first one. I don't know what your feelings are about it. Probably if there are any contributions or suggestions or comments can be brought forward.
How could you make a presentation through these systems or class presentations?
There?
how could we make presentation?
How you could make presentations?
Yeah.
Just the way I'm doing it.
Okay.
But I'll pass the rights. I'll pass the rights to you so that you go ahead and do the presentation.
Okay.
I hope, Nani, I remember last time we could get rights so that we allow a student to take us through the process. Then once he's done or she's done, I take away the rights. Then I now come in as the moderator.
Okay.
So it can be done here, right?
Okay.
It can be done here. So is that in agreement?
We agree with it.
Melat?
Yes, I agree
Melat?
with you. Yes. Yes, I am agree.
Yeah. So if that is an agreement, Girma,
Yes.
can you probably, of course, we are meeting tomorrow. Is it possible for you to send me a list of all the students who will be part of this class?
Okay, we have already 4 students. We have already 4 students.
So can you give me their names?
Okay,
For
can you
purpose
give
of allocating, for purposes of allocating topics for research and presentation?
Okay. Can you give them now or through letters?
Oh, do you have all their names ready?
Yeah, Melat, here is Melat Kamal.
So I can see I have Tamiru Girma.
Yeah, Tamiru Girma, Melat Kamal,
Melat
Marcos, and the other is Kadir
Kadir Muhammad, no? Kadir Hassan, Hussein Mr.
This Marcos is
Udasi Marcos.
Udasi Marcos is one of us. We have 4 members. We have Tamiru Girma, we have Melat Kemal, we have
Udasi
Marcos, and Kadir Musa.
Yes, you're right.
Okay, so those are the 4 who are members of this class. And so when I'm working on the course outline, the one I'm going to share, I will allocate topics to individuals to go and do research and then come back and present on these areas.
Okay.
Is there any other comment or question? Melat, you had a question?
No.
I didn't get you clearly.
No. Yes.
Yes?
Yes.
Can you bring out?
Yeah.
Suggest?
You say
yes.
We do a research. That's good.
Yes, you'll do. I'll give you a topic so that you go and research on it, and then prepare slides for presentation, and then we'll arrange when the time comes for presentations. You'll come in and do your presentation.
We'll make it.
How can we present?
Huh?
How can we present in online?
I can do it. I can share my rights. I can pass on my rights to you, so that you now you can share the screen. You can share the screen. Okay. And you can also do what? You can share the screen. You can do your presentation. Okay. So these things are possible.
Okay.
These things are possible.
Do you have my email?
Hello,
Hello, doctor.
last time we used to communicate with your email.
Yeah, okay.
Yeah, but you can just send me a hi, just to recall, to
Okay.
remind me of the email.
I'll make it okay. So you
Just
can
send
send the course title and the other courses subjects.
I can send the course outline,
Okay.
but just send me the hi email.
No, I send you now currently. Just
Yes, so that I can share now the course outline. But I will do it after incorporating these names for allocation of topics.
better. Okay, I accept. We accept.
Okay.
So
Any other comment?
we don't have no. Thanks
No.
for your discussion.
Mm. Okay. So the host left. I think
Okay.
being the first time we are meeting again,
Okay.
Tomorrow?
and there's an introduction. So tomorrow let's meet at 2, so that
Okay.
we run through this and see how much we can cover in terms of our requirements. Otherwise, thanks for turning back. And thanks for
Okay.
seeing me
Thank
again.
you. Okay. Bye.
I'd missed you guys a lot.
We miss you too.
Yes, but it's good. It's good we can now meet again and have classes together. So we'll continue discussing this.
Okay.
Okay. So I look forward to meeting you again tomorrow at 2 to start off the class on a serious note. Otherwise, thanks and have a good night. Thank you.
Okay.
night.
Good
See
night.
you.
Bye.
See you tomorrow.
Bye bye.